Zimbabwe is still our focus at the moment. The country's reduced charges for electronic payments after an agreement between the Reserve Bank of Zimbabwe, commercial banks and payment platforms in the country. Ever since the onset of a cash crisis, the central bank has been trying desperately to promote cashless payments, but many had felt the costs of plastic money transactions and electronic fund transfers are just too prohibitive. Now, charges on real-time gross settlement transfers have been cut in half, down to $5 from $10 per transaction before, and that's just one of a range of measures, all of which are designed to promote cashless transactions. Let's find out exactly how they're working. Farai Mwakutuya is in the Zimbabwean capital. He's got more data on this story. Farai, let's step back a little. Ever since these new cash conversion measures were introduced in May, the cash crisis seems to have just gotten a lot worse. Why does the Reserve Bank think these latest efforts, this latest push into electronic money will work?
Well, quite right, Rama. Despite assurances from the central bank that things will get better, they haven't. Now, what these reduction in charges will do is ease the demand and pressure on hard cash. A lot of people have been queuing up at banks trying to get physical cash because the cost of, swiping at a supermarket or paying for their utilities using transfers is just too much. And so because they've been reduced now, the expectation is that more people that have been shunning these services will start using them, and so we'll see fewer queues at the banks, less demand for hard physical cash, and hopefully more convenience for the average Zimbabwean.
Indeed. We also do understand there's a bit of a crisis brewing in Zimbabwe. Doctors announcing from the 1st of July they will not be accepting any payment by medical insurance providers. Has there been any formal response to that by the Reserve Bank of Zimbabwe?
Well, Rama, no formal response yet from the central bank. The official response we've heard from the arm of government that has been commenting on this is the Ministry of Health, saying that this move by the doctors is illegal. However, what this will do is obviously put more pressure back on ordinary Zimbabweans, because now they'll need hard cash to be able to, get medical attention. Not all these clinics and doctors and facilities will have swipe machines, for instance, and certainly doing real-time gross settlement transfers may not work because, the minute you need medical attention, it's probably immediate or needed there and then. So it will put pressure back on Zimbabweans to get hard cash out of the banks.
Indeed. About a week ago, the Reserve Bank also put out an interesting statement, basically threatening to cancel the licenses of either banks or foreign currency dealers who didn't comply with these new exchange control regulations. But has that threat translated into any action since then?
Well, not yet, and I think that could be because the central bank is still conducting its monitoring and going into investigating some of these institutions and traders, but also because perhaps the banks themselves are towing the line and are complying with those regulations. Just to give you a bit of a summary of what's required is that withdrawal limits have been slashed. Limits must be $1,000 maximum. Most of the banks are giving much less than that, $500. Some banks are $100. They're also supposed to limit the amount of money that's used on imports, and there are three categories that have been devised for imports, starting with the essential imports, imports that will go into the productive sector, and very lastly, imports that are being used, money that's being used rather for non-essential imports, things such as mineral water, things such as chocolates and sweets, which unfortunately and strangely enough, Zimbabwe has been running up a huge tab on.
Indeed. We'll have to leave it there for the time being. Thank you for the update. That's Farai Mwakutuya. Of course, he's been keeping us well informed of all the developments, of course, in Zimbabwe's current economic crisis.